Hello, everyone, and welcome back to another episode. I'm your host, the Millennial Investor, and today we're going over a stock that a lot of people have been debating about here in 2020. It's had a huge downturn, all the way up from $400 plus a share, all the way down to the 90s. So this stock has had wild swings in the past year or so, and I wanted to give my opinion on it. We're talking about Boeing. And recently, as of late, the last month or so, Boeing has seen a revival in the stock price. And I wanted to go over why that is and what this company is going to look like going forward. I did a review on the stock about 6 months ago back in June, and I wanted to re-update you guys on what's still going on with this company and why I think that they're going to be successful in the long run. Now, based off of this article, it's saying that the U.S. agency said changes in software, design, and training has made the plane safe to operate after 2 fatal crashes and 20 months out of service. The company on Wednesday got clearance for the plane to return to American skies after convincing the Federal Aviation Administration that changes in design, software, and crew training would eliminate the flaws that caused fatal crashes in 2018 and 2019. Boeing expects to start 2021 with a global workforce of about 130,000, down nearly 19% from its headcount at the start of this year. Revising its MAX business will be a major test of the company's ability to withstand the pandemic and reestablish its long-time stature. Now, this company has a lot of positive news going around it with the 737, and that's why the shares have started to come back alive, like I said right here, going from about $144 a share now up to the low 200s. When I started my YouTube channel back in April, so this was back when all the negativity around Boeing was surrounding it. You can see, so April was about here when this article was posted, right around here, when it was $130, $120 a share, and people were not looking forward to the long-term outlook on Boeing. I'll read this little paragraph. The pandemic is causing investors to rethink Boeing long-term projections. Airlines have reacted to plummeting demand for travel by cutting flights and grounding planes, and even if demand returns when the pandemic is contained, the U.S. economy might by then be in a recession. Some of the planes large airlines are grounding today are unlikely to ever fly again, and if demand doesn't return quickly, the carriers are unlikely to need all of Boeing jets they have on order. Now, I wanted to go over in this video, before we go over any further, I wanted to show that the difference in opinion over this company over the course of 6 months has changed dramatically, and I also have an interview I want to show. So in this video, we'll be showing lots of different things, like we'll be showing those 2 articles, we'll be showing this quick interview. I want to give an update on the unfilled orders, the backlog of orders that Boeing still has even to this day, and then I wanted to just give an overview on the products and services that this company has to offer on the commercial side, the defense side, as well as the aerospace side. And then last but not least, I want to go over the balance sheet. I'll show the balance sheet and the income statement for this company and why I think it's set up perfect for the long term. And I think that this short-term noise is going to do nothing for Boeing's long-term success. So if you're new to the channel, guys, and you're not familiar with me, and my name is Jordan, I'm the Millennial Investor, and I'm a dividend investor. I invest in dividend-only companies, and these are the charts that update my annual and monthly dividend income, as well as my portfolio and monthly YouTube income. And if you want to subscribe to the channel, I'd invite you to do so. And if you want to get signed up with the brokerage that I use, we now have 56 people signed up. Go ahead and use this referral link. You can get $10 just for signing up and depositing $100 to the platform. The sign up link to get signed up is right here where I'm clicking. It is down below in the description. And if you want to see the 26 companies that I currently own, it is also shared down below in the description. If you want to see it, there are these 26 companies right here. But let's go ahead and dive straight into the video. And like I said, these articles are very differing opinions from the way we were looking 6 months ago towards today. And I wanted to show this opinion by Jim Cramer. I don't necessarily always agree with what he has to say. He can have some kind of fishy opinion sometimes. But I think the way he puts it in these couple of sentences is a perfect opinion about how consumers will feel about flying planes and how they'll feel about the Boeing MAX 737 in the next coming months and years.
Look, I think that there is a tragedy timeline. We had it with Chipotle. We had it with a long time ago with Jack in the Box. We had it with Taco Bell, which is that people begin to forget. Now, I know the media doesn't forget, but the individual who flies is thinking, well, I want to take Southwest, or I want to take American. They're not going to ask, as they would have a year ago, is this the MAX?
So that was Jim Cramer, and his opinion is that people eventually are no going to ask, is this the MAX? I don't want to fly if this is the MAX in the air. People get fatigued about these things, and they tend to slowly forget over time. It's kind of like when you see numbers about the coronavirus. People get really worried about the coronavirus, and they check the numbers every single day, every single hour, and then over time, people just get fatigued by it, and they just pretty much say, I don't really care anymore. Now, at the end of June 2020, which is around the time that I filmed that video, They had roughly 5,232 aircraft planes that were in backlog, orders that they could not fulfill at the time because either the planes were grounded or they just didn't have the manufacturing quick enough to fill those orders. Now, if we go to today's numbers, today looks a lot different. You can see that the amount of orders is down significantly. The year-to-date gross orders. Now, remember, this is in the middle of November, so we're almost at a full 12 months worth of orders. We've only had a few to the United States, a couple to Poland, a couple to Japan and China, not really any orders at all, with only 111 deliveries here in 2020. And you can see the year-to-date net orders is down 1,020 orders as of last year comparing to 2019. But the unfilled orders, as in the backlog, has not changed. They still have over 5,000 plus orders that they need to fill in the next couple of years. So this is a really good sign for Boeing because not only do they have to fill in today's orders, what's really the focus here as a shareholder is not what they've done, not what they've done here in 2019, what they've done here in 2020. What the focus should be as a shareholder, what are they going to do in 2021? What are they going to do in 2022, 2023? And this is a really good sign seeing that they still have over 5,000 orders lined up as of the end of October on Halloween night. Over 5,000 orders. Now, just real quick, if you want to see some of the products that Boeing has to offer, a lot of people tend to focus on the commercial side of things. Some of the products that they have for the commercial side is next generation 737, the 737 MAX, 747-8, 767, 777, you get the point. They have a bunch of just basic commercial airplanes. And these airplanes are not easy to duplicate. I recently made a video about how I just added LMT, Lockheed Martin stock. And one of the reasons why I love this company is that they have a huge economic moat and a high barrier to entry. And that means people cannot really just come out and any company can come up out of the dust and try to duplicate the products that this company is making. The same thing goes for Boeing, which is also one of the main competitors for Lockheed Martin. Lockheed Martin makes a very high dollar pieces of equipment like rocket launchers and missiles and fighter jet. And these products are not products that can be duplicated. And people, even if they come out with a $10 billion budget, they're not going to be able to compete with Boeing or Lockheed Martin as far as their defense products go. And speaking of defense products, some of the defense products that Boeing has to offer has a wide array of different products. You can see they have all these different products right here that they sell to the United States government. And one of the cool parts about Lockheed Martin and Boeing is that pretty much no matter what, no matter who's in office, no matter what's going on with any political turmoil or any wars out there, pretty much the United States military is always going to need weaponry, they're always going to need aircraft, and Boeing and Lockheed Martin are always going to be there to support those products. And then last but not least, they're also big into the space sector. Now, Boeing has a lot of major products and services out there, and a lot of them are for the United States government, including a lot of our major satellites that are out there in space. They also have ties with the International Space Station, and then they also have ties with the United Launch Alliance. So this company is very integrated with not only the U.S. government, but pretty much all factors of anything that flies. So this company, like I said, makes products that cannot be duplicated, not be copied, high barriers to entry, a very high regulated industry, and something that just pretty much anyone can't come out there and copycat. Now, I wanted to talk last but not least about the balance sheet and income statement for this company. I wanted to show first the income statement for this company going back to 2016 to the end of 2019. So this is before the pandemic. Now, the Boeing 737 MAX hit here in 2019. Now, if we go back to 2016, before that, this company was growing revenues every single year. 93 billion, 94 billion, 101 billion. And then it really took a downturn here in 2019 when they grounded the 737. Now, if we go to quarterly, this year they're probably going to finish somewhere around $60 billion in revenue. So once again, another downturn. But what's really important here, now that we're on quarterly, I want to look at the balance sheet, go back to annual, and I want to show you how this company held up on the balance sheet going back at the end of 2018, before the MAX was grounded. They had roughly $8 billion in cash, and if you go to their long-term debt, they had about $10 billion in long-term debt. So almost a 1-to-1 ratio. They can almost pay off their entire long-term debt tomorrow if they decided to do that. Now what we're going to do now is go to quarterly. Now, while things don't look as good today, it is still set up quite nice for the future. It's not anything that is out of control. If you add up their cash and cash equivalents with their short-term investments, these were updated at the end of September, so they have about $27 billion in cash and cash equivalents and short-term investments. $27 billion in cash and they can get access to today if they needed to. Out of that $27 billion, $57 billion is in long-term debt. So only about a 2.5 times higher in long-term debt 2 cash and cash equivalents. So this company is not at any point to filing bankruptcy with the back orders, and they're still bringing in $60 billion in revenue. I think people like to talk a lot about the downturn, about the max, and pricing a whole lot of bad scenarios for this company. But at the end of the day, they're still doing about $60 billion worth of revenue, and this long-term debt is not anything that is out of control. So for Boeing, if you're looking at it today and it's $200 a share, and you're waiting to get in at a better price, you might not see it. I think that a lot of the reasons why this company had a downturn is really starting to go away for the stock. People are getting fatigued about the bad news for the 737 and the coronavirus and all this stuff. So if you're wanting to buy the stock, I think now is a good buying opportunity, just like I recommended 6 months ago when it was about $150 a share. I think that a couple years from now, 2021, 2022, 2023, this company will get back to its high 200s, $300 a share range. So this company has a lot of opportunity, and if you're wanting to invest in it, you have my blessing. I currently do not own it right now because they do not pay a dividend, and I only invest in dividend-paying companies. But that said, it is a wonderful company to own. But thank you guys so much for watching all the way to the end. Like I said, if you're new to the channel, I invite you to subscribe so you can watch me update these charts every single month, as well as give my opinions on not only the 26 companies that I own, but other companies out there as well. But thank you guys so much. Like I said, if you want to get signed up, this referral link will be down in the description, as well as links sharing my portfolio. So thank you guys so much, and I'll talk to you guys next time.